but we are recording in case you need to replay this at a later time. So we have payables which are based on invoices. So for example, we purchase merchandise, and so we're going to have an accounts payable. We purchase this merchandise on credit. We have it payable. The vendor's going to send us an invoice for that. Or we may have received maybe a bill for the power, or a bill for any other expenses that may have. And so we have payables that are based on invoices, right? We may also have accrued expenses. So accrued expenses are expenses that we know that for sure we're going to have, okay? So for example, what would be an accrued expense could be salaries, right? So I know I have to pay my supervisors a salary for the pay period that they worked, even though I haven't paid them. And so we have that, okay? And then we have another category, which are contingencies. Okay, there's another one, a fourth one, which is commitments. Okay, contingency. So chapter 13, I'm pretty sure you guys are familiar with 1 and 2. Chapter 13 delves into contingencies, all right? So contingencies, we have 2 types. Can somebody mention what the 2 types are? We have loss contingencies and we have gain contingencies, okay? Loss contingencies and gain contingencies. And so these contingencies are things that have already taken place, but we're not sure what the outcome of those will be, okay? And so in order to record this contingency, just to mention, commitments has to do with, for example, you are the guarantor on a loan. Okay, your friend took a loan at the bank, and you know that he needed someone to vouch for him, and you signed the documents, so you made a commitment. So if your friend doesn't pay that loan, then you're going to be responsible for paying it. And so this is what a commitment is about. So this is just FYI. Most of the time, if it's material, there'll be a disclosure on the financial statements. Now, in terms of loss contingencies, when do we record loss contingencies? Does anybody know? Okay, I will leave you with that thought. I'll be right back.
You are now unmuted.
Okay, so Cody, when it's probable and can be estimated, and Eileen, that's correct. Okay, so it has to meet 2 criteria. One is that we can estimate it, okay, and the other one is that is probable. And I guess we can think of probable as, I would say, greater than maybe 70%, okay? So it's probable that this is gonna take place. And excuse me, we have the numbers and we're able to calculate that. And so we need to know, in terms of the exam, we need to know these 3 categories, and then how do we report these different categories on the financial statements. So any contingency that is probable and we are able to estimate, then we're going to accrue the liability, and we're going to have a disclosure note if it's material. If we're not able to estimate it, then it's just a disclosure. If it's reasonably possible, so I would say maybe around 50%, then we're just going to have a disclosure. If it's remote, we don't even need to disclose. Okay? So we need to know this. We need to know this. So here we're talking about accruals, actually, because we're talking about a vacation leave. And for this company, the vacation, if you're working and you're a full-time employee, you are you have vacation, right? Usually after you work a year, depending on the company's policies, these may vary, but after you work for a year, then you accrue about 2 weeks of vacation, which you can take in the following year. Now, some companies will allow you to carry, keep accumulating vacation time forever. Some other ones, most companies have a cap. Okay, so the maximum amount that you can accumulate, let's say, is 200 hours, and then after that, you're pretty much gonna lose that money, and so you have to use it. So kind of forcing people to take that vacation. In this case, it's a little bit more simplified in that we have accrued the vacation only for 2021. So you can expect that in a real situation, you're going to have many layers, right? You're going to have people who have accrued vacation from 2019, from 2020, etc. Okay, but here is simplified. We're only talking about 2021. All right. So for 2021, we have paid our employees $422,000. Of this $422,000, $3,500 are for vacation. All right, is for vacation. And so if we want to know what the actual salaries were, we're going to have to subtract this vacation. So 422,000 less the vacation. So our straight salary is going to be minus the 35, 418,500. Okay, so this will be strictly our salary, not including the vacation. All right. And so we're told that all vacations earned before 2021 were already taken, so there's nothing carryover from previous years. We're strictly talking about 2021, and we need to find out how much we need to accrue. So if we take our 418,500 and we divide it by this 45-hour that we are accruing, then we can find out. And again, this is a very simplified example because in the real world, you have different salary scales or hourly scales for your employees. So that doesn't mean that everyone's going to be earning the same amount, right? But it's okay. We'll go with this. This is just to understand basically what is the accrual, the recording the accrual. And so we have already recorded 3,500 of it. So that means that we are left with 5,800 to record. Okay, so we have 5,800 that needs to be accrued. And so in this case, we are going to use a debit to salaries expense and a credit to liability. Note that we're not saying payable, we're saying liability, okay? So we said salaries expense, and it was 5,800. And we have a liability And we're going to call this compensated absences of 5,800. Okay, so this will be our adjusting entry. And now, in the real world, they might use a different designation. They might use vacation expense and then vacation liability, or they could use accrued leave. I don't know, whatever the company has in their chart of accounts. All right. Are there any questions regarding compensated absences? You don't have to worry about bonuses. I think your book talks about bonuses. You don't need to worry about that. They also talk about the payroll tax liabilities. We're gonna leave that aside for this exam, the payroll tax liabilities, and we'll just concentrate on the accrual of compensated absences for now. And the warranty, which is what we're going to be looking at next, I believe.